All right, joining us now to discuss is Isaiah Douglas, partner at Indiana-based financial planning firm Vincere Wealth Management. Hello, Isaiah, thanks for joining us. So the U.S. reported a 7% inflation increase in 2021. That's a 4-decade high. Is Turkey the canary in the coal mine for what could happen to countries with runaway inflation?
I mean, it could, right? Is Turkey going to be the economy that changes everything? We don't know for sure. And I think that's a tough one to look at, but there absolutely has been demand in the country, as you just talked about. When you start to see the faith in the currency go away, Bitcoin, stablecoins start to become really interesting to the population. And I think that can certainly be something that has been shown around the world. I mean, you talked about El Salvador a little bit earlier, and see the adoption there. So certainly can be.
Do you think it's a trend that could catch on to other developing nations?
Absolutely. I think the announcement from Strike and what they're going to do down in Argentina is really interesting. And you just continue to see, I think, those in the United States, we are really spoiled, right? For the most part, the US dollar has been such a great currency, but around the world, there's a lot of people that are affected and do see, overnight, basically their savings of years and years wiped out. So it wouldn't surprise me at all to see the adoption be there first, because I think the way that most US investors look at Bitcoin is not as much from a savings and medium of exchange and unit of account, but overseas, that certainly can be the case where they start to look at that as, hey, this is something that's more reliable than what I'm currently using for my government.
All right, so you wrote an article for CoinDesk, what advisors should know about Bitcoin and inflation, and maybe you can go over what your thesis is here.
Yeah, so the thesis here is inflation is certainly here. It's here to stay. And the idea looking at with the US dollar, it's really hard to project what is going to happen over the next 6 months, 6 years, as far as the creation of new dollars. And if you look at that from an M2 perspective, it really started growing, from early 2000s through about 2010 at 5% annualized as far as new growth. Then from 2010 up till 2020, it was more at a 7% annualized clip. Since 2020 and kind of the COVID stimulus and that injection into the economy, it's closer to 18% annualized. When you start to look at that, the impacts are drastic across the board on the cost of what it takes just to live, to get by. And you can see that home prices, food prices, used cars, new cars. And yeah, so the thesis is saving and storing wealth in Bitcoin can help allow you to continue the lifestyle that you're looking to live.
Do you think the U.S., though, will get inflation under control with rate hikes predicted over the year and eventual winding down of the trillions of dollars worth of bond buying?
I think we're kind of between a rock and a hard place, right? So if we drastically raise interest rates, a lot of other things in the kind of economic system start breaking. So you have kind of two things. You let inflation run hot and the debt kind of eases off, and that's just really painful for us. Or you try to hike rates and see what happens. And again, my crystal ball is a little cloudy. I don't know for sure. And I know that a lot of people would love to have clarity there. But if I was to make a case, I look at inflation likely running higher for longer, just because the issues with the supply chains. What you're seeing is that coming to fruition as far as then the producers of everything jumping. The U.S. Producer Price Index actually today came out at 9.7%. Which is the highest year-over-year increase that's come out. So every company now has the excuse to go raise prices, even if they aren't feeling that pressure from their vendors or service providers.
So how much do you think people should be shedding dollars for Bitcoin? What kind of allocation are you talking about?
That's the question that it's going to be the answer. I think your previous guest talked about it, right? Like everything's going to be my opinion, right? And it's always going to be, it depends, which I know is a tough answer for that question. I did write a piece for advisors for CoinDesk talking about, hey, how can you look at Bitcoin in an allocation? Is it, hey, it's a hedge for fixed income and bonds. It's a kind of a growth sleeve. The way that we've looked at it from a Vincere perspective and with clients is make an initial allocation and then dollar cost average into it. Let the volatility of Bitcoin, as you talked about, coming down from high 60,000s down to lower 40s. Buy your initial allocation, get Bitcoin exposure, dollar cost average in from there and let the volatility do its thing. But if you just dollar cost averaged into Bitcoin last year, you were up 26% daily, bought every single day throughout the year. And that is something where if you look at the costs and increases in prices of homes, cars, food, that's helped preserve purchasing power, which is the whole thesis behind the idea of using Bitcoin as an inflation hedge.